Hello, and welcome to another webinar by Smartkarma. I'm Michael Tegos. Today, I have the great pleasure of welcoming back Insight provider Kyle Rudden, who will go over the ecosystem of ESG data, its importance for generating alpha, and the problems around it. This is the fourth session in Kyle's webinar series on ESG investing, organized in collaboration with the Singapore Exchange. Kyle, welcome once again to the webinar. It's that time again. So let's get right into it.
Great, thank you, Michael. Good evening, everyone, and thank you for your interest and your participation in this webinar. This being the fourth in a series on ESG-related investing, and this one specifically being on the subject of ESG data. I'm going to do a quick introduction, followed by an overview of what we'll be covering, the agenda, and then we'll just get right into the main content because there is a lot of it on this subject. My name is Kyle Rudden. I cover sustainability and ESG investing topics on Smartkarma, and I've been doing that since about 2019. Prior to Smartkarma, I was involved in some other aspects of ESG-related investing, ESG investment research, doing some consulting work on reporting standards with GRI and SASB, and even developing some ESG equity indices. In total, about 12 years dedicated to ESG-related investment research. Before that, more traditional investment research roles, mainly as a sell-side equity analyst and head of JP Morgan's Global Energy Equity Research Group. In a way, I was covering ESG issues back then. I just didn't know it, or at least we weren't using the ESG vernacular. But last 12 years or so, really, truly dedicated to ESG research. This presentation, like most of them, structured into kind of three main content sections. The first will be a quick overview of what we're talking about when we say ESG data, some basic definitions and categorizations. I'll be really brief with this. Second, key points relating to what is commonly referred to as the ESG data problem. It's really a collection of problems, plural, inherent in ESG data. I'll breeze through some of them because they're fairly well known, but I really want to focus on the evolution of that ESG data problem. And then thirdly, just kind of go through some examples of data sources and resources and various ESG data related researching tips for those that really want to get hands-on and do it themselves, so to speak. And then we'll end with a Q&A and a discussion session. And I do want to emphasize the discussion. It doesn't need to be questions. This is actually a fairly complex issue, and there are certain issues that I may touch on briefly that people have real interest in. If you want me to go into any further detail on something that I cover, by all means, that can be included in that last session. So anyway, moving on. ESG data concepts. So some of this section will be obvious. All right, the stuff like ESG is non-financial information, et cetera, and so forth. I'll breeze through anything that's overly obvious, just make some quick mentions where relevant. But the main goal here really is to present a broader working definition of ESG data that I will use throughout, categories, common data sources, that sort of thing. So what is ESG data? So the first slide is one of those obvious things. I mean, generally speaking, we're talking about non-financial, sometimes referred to as extra-financial data about environmental, social, and governance issues, commonly used to either or both assess how a company's ESG profile and performance impacts the company itself, like financials, or how a company's ESG performance and profile impacts the greater world, like society and the environment. The remaining three bullets on this slide address or summarize some issues that I'll cover more depth later, but just very quickly goes over categories of ESG data. And again, the next few slides go into detail. Common sources of ESG data, and although the third bullet point doesn't have its own slide, I'll address why quality ESG data is important and to whom, particularly with a focus on investors and investing. This slide I put in last minute. I'm not really going to talk about it, but I just felt like if I didn't include a slide of some examples of non-financial ESG information, that there would be a hole here. You can go back and refer to it. I'm sure you've seen things like this. But really, I wanted to get into some of these other issues. Data categories. The reason I'm putting this slide up is because it conveys the broad definition of ESG data that I'm going to be using throughout this webinar. Broadly defined, ESG data falls into four often overlapping categories. I mean, first, there's raw ESG data, right? Company reported or issue reported ESG data, and data in its purest form for all intents and purposes. For example, greenhouse gas emissions in tons equivalent, or some multiple thereof, like megatons or gigatons. Then closely related, you've got calculated metrics, metrics that are based on raw data, but are one or more iterations away from that truly raw state. So to stick with the emissions example, GHG emissions intensity rates would be an example of a calculated metric, right? So the raw data is the tons or some multiple thereof, but now in calculating intensity rate, you're dividing that by some denominator, commonly a unit of revenue, but sometimes industry-specific denominators such as square footage or square meters in the case of real estate and so on. There's other information, qualitative information that is sort of quasi-data. I mean, I consider it ESG data. It's ESG information, quote unquote data, that tends to be more qualitative or descriptive in nature, but it's still an important part of the overall ESG data profile. And we're talking about things like, written policies on diversity, inclusion, human rights, or more industry-specific things like anti-money laundering policies in the case of financial institutions, that sort of thing. And then lastly, kind of data-derived or data-related products, third-party ESG data products, either ESG data and metrics, sometimes repackaged data, sometimes calculated metrics, and then, of course, scores and ratings and rankings and that kind of thing. And again, there's some overlap in this. And talking about source data, that's really issuer reported only. Calculated metrics can come from issuers, which was the example I gave in terms of emissions intensity rates, as well as third-party ESG data providers, and then obviously data-related products rarely come from the issuers. Those tend to be from third-party providers only. Common sources of ESG data, I'm basically putting them into three categories. There's really, the first two are the main ones, and then I'll explain the third one in a second. This slide basically summarizes the three main categories of ESG data, including a few important nuances. The first category, company reported data, issuer reported data, which I tend to call what referred to as primary source ESG data. You get that in a number of different places. For the most part, either of the first two bullets under it, dedicated sustainability or ESG reports, or even sometimes still called corporate social responsibility reports, and increasingly integrated annual reports. I say integrated annual reports. I'm talking about annual reports with sustainability or ESG sections substantive enough that they could stand on their own as dedicated reports, but for whatever reason, the company decides to include them in the integrated report. Beyond those two, you occasionally see sustainability or ESG data supplements increasingly to support the former two bullets, the sustainability reports, the annual integrated annuals. Talking about like Excel spreadsheets that are available on the website that really provide readily accessible data that appears in the reports. And then, of course, there are various other sources like websites, analyst presentations, and so forth. The second category, third-party providers. It's really first the vast ecosystem of third-party commercial providers of ESG data and ESG data-derived products. Again, talking about the big market data providers, and I'll go into this a little bit more later, but Bloomberg, MSCI, there's some ESG exclusive firms like Sustainalytics, and then there's a whole host of niche data firms that tend to focus on a single pillar issue like carbon risk metrics or that sort of thing. And the data aspect of this includes, in many cases, repackaged data reported by issuers, and then data that's what we'll call value added, some of the calculated metrics, more process scores, ratings, rankings, et cetera. We'll get into this in a bit more. And then this third category, sort of an emergent category, if you will, or a catch-all, just other sources and providers of ESG data. And just some examples, and again, these pop up here and there throughout the remainder of this webinar. Stock exchanges are a big one. They're increasingly launching, ESG investing portals or ESG data hubs or whatever they call it, you're seeing that standard setting organizations or frameworks like CDP, which used to be called Carbon Disclosure Project, or GRESB for real estate, are kind of packaging and providing data through their own portals, which is a relatively new trend. You can also find data, it tends to be issue or reported data, but often in more detail through various government agencies like securities regulators or occupational health and safety ministries, that kind of thing. And then there's this last bullet, which is sort of like alternative and other. There's a whole array of alternative ESG data providers, some of which apply AI, like True Value Labs is a major one. And I'll discuss these and their place a little bit later. The next section that I want to cover today, the ESG data problem, as it's commonly known. And as I said before, it's more of a collection of problems. But the importance of this section, why I want to address it, is more and more stakeholders and stakeholder groups are relying on quality ESG data for critical decision making. I mean, investors obviously. Quality ESG data is critical to making ESG-related investment decisions, generating alpha, or determining whether or not you can generate alpha. But there are other groups, and governments are increasingly using corporate ESG data for sustainable development planning, financing sustainable development goals, not to mention regional securities regulators, which recently become very involved. Other groups, customers, are increasingly interested in corporate ESG performance. You just think of all those like product carbon footprint apps that are available on iPhone and Android. Prospective employees are looking at ESG, generally ESG and sustainability performance of potential employers. A whole host of stakeholder groups are relying on quality ESG data to make their decisions. And all of that makes the age-old ESG data problem even more relevant and even more consequential. And I don't want to belabor this, but I do want to go over a couple kind of key points about this, and then get into the evolution. So what are we talking about when we talk about the data problem? As I said before, it's not a singular problem, not one specific problem, but rather a catch-all phrase for a variety of problems inherent in ESG data. And the quote-unquote data problem is actually a fluid concept. After so many years, we're talking about decades for Europe, the US, a little less for Asia. Just so many years, you'd think we would have fixed the ESG data problem by now, and in some respects we have, but over time, specific problems have been fixed, but other problems move to the forefront, and some other problems, new ones, entirely new ones emerge. In short, though, the quote-unquote data problem has always been there, and it continues to be there. It changes, and it has changed from a problem of, or collection of problems of quantity primarily, to being a problem primarily about quantity currently or today. In the past, I'm going back just the US and Europe to 10, 20 years, and probably a little bit more recently in Asia, the problem was a dearth of ESG data. Few companies reported, either based on mandatory requirements or on a voluntary basis. So few companies reported that quality-related issues like lack of standardization, lack of comparability, inconsistency, et cetera, so forth, were relatively moot. They always existed, but were relatively moot, overshadowed by a lack of data, lack of quantity. That has changed, and is still changing. It's a fluid thing. But we are, I don't want to say entirely awash in ESG data, but we're seeing more and more ESG data, both based on regulatory mandate and voluntary disclosure. And so the issue of quantity isn't that major anymore, with the exception of certain regions and a few other exceptions. But the quality issues kind of come to the fore at this point. And really, that's the focus now, and that's the driver behind a lot of the trends you're seeing in terms of policy implementation, et cetera, and so forth. There are a few specific data problem issues I want to address. We could do an entire webinar on the ESG data problem issue, and it's not what this is about. This is just part of this webinar. So I want to go through it quickly, but there are a few key points. The next two slides address this one and the next. Address key points related to company reported data and then third-party ESG data. It's not meant to be an exhaustive list, just some of the major points for context. Data problems are fairly well known, and I don't want this to be a data problems webinar, but I do need to address a few key points. As far as company reported ESG data and problems associated with it, there are a number of issues. First, I want to point out this is the most important category of the two by far for two reasons. Company reported data makes up the vast majority of all ESG data. It's the bummock of the proverbial iceberg versus the hummock. And those are two terms I don't know if you're aware of, but the bummock being the under the water portion and hummock being the tip. Second, company reported ESG data is the basis for the vast majority of third-party stuff. And as I'll explain a little more later, the problems associated with company reported data often are reflected in third-party data, in some cases amplified by. At the core is the unregulated and largely voluntary nature of ESG reporting and thus ESG data. This is changing rapidly. It has changed rapidly over the last couple of years, but still only a fraction of the world's issuers are subject to some sort of mandated ESG disclosure. The table on the right actually overstates the numbers because there are nuances to certain mandates, like it only applies to the largest 1,000 issuers, et cetera, and so forth. I didn't account for that. So these numbers are overstating the market cap and the number of listings that are subject to some sort of mandatory ESG disclosure. And mandatory also includes comply or explain. So really the gist of that table is that still, despite changes in regulation, very few of the world's listed issuers are really subject to mandatory disclosure. Now, a lot of them are reporting on a voluntary basis, but that lack of regulation, general lack of regulation, over-reliance on voluntary reporting presents a number of issues related to inconsistency of ESG data, and in turn, incomparability, and certain reporting biases and data gaps. In terms of inconsistency and incomparability, a couple issues. In terms of voluntary reporting, you've got issuers choosing whether to report and then what to report and how to report it. So metrics are all over the place. Existing regulations do vary a lot in terms of the disclosure requirements. The gist of all of that is that ESG data still isn't even remotely standardized, even within the same sectors. And that makes comparison and benchmarking still extremely difficult. Again, things are changing, but we're not there yet. It also creates certain biases and gaps in ESG data. The biggest issue, particularly with voluntary self-reporting, is selective disclosure, right? If you're reporting on a voluntary basis, you decide what to report, and that tends to lead to again, selective disclosures that lean rosy, tend to, I don't say greenwash, but include things that make them look good, and then green hushing is excluding things that make them look bad. And then there are various other, data gaps and biases, both within issues, sort of within companies and then across companies. Across companies, a good example is employee health and safety data. I've seen countless permutations of essentially the same metric. Companies using, injury rates based upon various definitions: OSHA, GRI, Ministry of Manpower, et cetera, and so forth. And then they misuse or misunderstand, misinterpret those metrics, and you see various mixing and matching of denominators. Per 100,000 workers, per 1 million man hours worked, et cetera, and so forth. And you also see inconsistencies, biases, and gaps within companies. Companies often change what data is reported or how it's reported from year to year, particularly as companies are coming up the curve in terms of ESG reporting and kind of figuring out what their sustainability and ESG reports are going to look like. A common example is, again, intensity rates and changing the denominator. They might start off with emissions per unit, tons per unit of revenue, and then switch to some industry-specific denominator. And another major inconsistency issue is partial measurement or partial reporting. Companies reporting, for example, emissions for one region or one business unit, but not company-wide. And then there are, so that's within companies, they're also reporting biases and gaps that are more general. The quality and the existence of the quality of ESG data often varies by region, asset class, company size, et cetera, with major gaps in emerging markets, traditionally defined emerging markets, and then emerging ESG markets like Asia. In terms of common problems with third-party ESG data, the issue here really is that the problems I just mentioned inherent in issuer-reported data kind of propagate throughout the vast and growing third-party data ecosystem. In some cases, get amplified. And this primarily affects, kind of the big data providers, but it also affects some of the smaller ones. And I think the next slide kind of gives you a feel for that ecosystem. But first, a couple points on the problems. And this isn't, by the way, none of this is really fault of the providers. They're all really intelligent and excellent at what they do. It's just, the nature of the beast. The one-size-fits-all problem. I mean, providers have to cater to a large and ever-increasing group of potential clients and users. So the product tends to cater to kind of the greatest common denominator, if you will. And this issue, this one-size-fits-all problem, only gets worse as ESG proliferates and more people are interested in it. The other issues that are noteworthy are various methodological idiosyncrasies. There's a number of them, just a few examples. I mean, methods do differ. There are different methods of, estimating or just handling generally either missing ESG data or unreported ESG data. For example, MSCI uses industry averages to impute data that doesn't actually exist. It's not always a problem, but it's just something that is important to keep in the back of the mind. There are materiality or judgments, I should say, opinions kind of throughout all these the firms and products. I mean, commonly we're talking about opinions about weightings. Every third-party product in one way or another involves weightings. Obviously you analyze and you come up with kind of lower level ESG scores and you roll them up to the high level ESG scores. They're weighted in the roll-up process, and they're weighted differently, and those reflect judgment. So you never in any of these products, you're never dealing with anything truly objective. There's always some opinion interpretation involved, and that kind of creates one of the biggest issues. It's a problem sometimes. It's not always a problem, but is the issue of divergent and conflicting scores. Quite infamously, there are ESG scores, and the chart on the right is just a few examples. It came from a pretty famous report. I didn't source it, but just about how divergent scores can be from provider to provider. MIT University in the U.S. has an appropriately named project called the Aggregate Confusion Project that really assesses ESG methodologies and scores and the divergence thereof. Found that ESG ratings of all the prominent firms have an average correlation of just 0.61 in a pretty wide range. It's like 0.38 to 0.7 or so, which is significant. I mean, they compared that to correlations of credit ratings from the big three credit rating agencies, which average 0.92. So pretty significant divergence in ESG scores from provider to provider. That tends to be more of a problem than a benefit, but it can sometimes be a benefit. It can provide new insights that otherwise would have been missed. And the various methodologies also help to explain why occasionally some firms really miss some major ESG events while others kind of, I don't want to say predict them, but capture them. Going back a number of years, there was Dieselgate. MSCI did a great job about downgrading Volkswagen several months ahead of Dieselgate or the news of Dieselgate. And more recently, there was an issue with French nursing or fraud or something in a French nursing home. And there were several firms that actually upgraded their ESG ratings just prior to the news breaking of this fraud. So there are ramifications of different methodologies. This is not to really discuss in depth, but this is an example of a very small fraction of the third-party ESG data ecosystem. Really just intended to illustrate the size. And again, it's a small fraction. It's estimated, I think it was either KPMG or E&Y. One of the big firms estimated that there are currently 600 ESG data providers. Obviously, there are only a handful of big ones, sort of on the left side. These are sort of generalist market data providers that also do ESG. Kind of next down the line is that middle group, which I call ESG exclusive, firms that aren't into the broad, generally speaking, aren't into the broad market data like Bloomberg or others, but they're big ESG data providers. I mean, Sustainalytics is a big one. We'll talk about that firm here or there throughout the rest of the report. And then there are the ESG specialists. And the difference between the exclusive and the specialists, the ESG exclusive only do ESG, but they cover all three pillars of ESG: environmental, social, and governance, where the specialists tend to focus on one aspect, often one pillar, like carbon-related data or risk metrics or social metrics, that sort of thing. Again, really just intended to give a feel for the size of the ecosystem and implicitly the complexity of all the different methodologies and the implications thereof. The last section, data sources, define it a little bit more broadly: data sources, resources, kind of research ideas, tips, etc. With everything I just said before, there are really two significant trends that are emerging out of all that chaos. One is increasing regulation and policies related to mandated ESG reporting. It's coming from a lot of different directions. It's coming from securities regulators, it's coming from exchanges, et cetera, and so forth. But the point being that more and more companies are currently and will be reporting, disclosing ESG data-related stuff in a more controlled environment. So less reliance on voluntary reporting, more mandatory reporting, and along with that, hopefully, some more consistency. We're far away from one global standard, but there are efforts afoot to sort of rein in the disparity of frameworks and reporting requirements and come up with something that's fairly consistent on an international basis. The second kind of major trend that's emerging from all the chaos is that investors, I'm talking about institutional investors and probably others, are relying less and less on third-party data, and I'm primarily referring to the process stuff like scores and ratings. You have to remember that firms like MSCI and Bloomberg and others also provide quote-unquote raw ESG data, either repackaged issue-reported data or some basic calculated metrics. It's not all about the scores and ratings, but investors are relying less and less on highly processed third-party stuff and doing more ESG research and data analysis in-house, often with the support of ESG data and metrics provided by like MSCI and Bloomberg and others. But the reliance is coming down pretty dramatically. And that last point, i.e. doing more of it yourself, so to speak, is the inspiration for much of what's in this last section, which again are some examples of ESG data sources / resources and a few random research tips for finding ESG related data. First things first, though, before going into some of those, just some food for thought. Kind of keeping with the quality over quantity theme, I want to first mention the concept of core ESG metrics. This is not meant to downplay the importance of sector-specific materiality. Two webinars ago, I addressed ESG metrics and materiality, and sector-specific and other specificity is important in terms of materiality. This is not downplaying that, but it is a reminder of something that is, I think, particularly useful, especially for initial exploratory ESG data analysis. And it's the essence of core metrics. It boils down to two things. First, despite sector-specific differences and differences in materiality, there are certain ESG metrics that are nearly universal in their relevance and materiality. I say nearly, but for the most part, broadly applicable. And second, when you get beyond a core set of ESG metrics for most sectors, most companies, the marginal returns, of your research efforts, the marginal materiality, et cetera, and so forth, diminish pretty rapidly. And there isn't one unanimously agreed set of core metrics, but if you took a survey, I think there'd probably be a lot of agreement, probably 90% plus. And an ideal example of what I'm referring to, and the specific core set of metrics, is SGX's recent proposal. In its consultation paper, titled something like Common Set of Core ESG Metrics, it listed 27 metrics, I think, that are pretty universally relevant. And you can review them if interested. The underlined, on the left-hand side, the blue underline thing is actually a hot link. I think it should work. You can review them if interested. I'm not going to go through them in detail. The point here is that they cover metrics that are generally relevant to all companies and are reflective of all three ESG pillars. There are environmental issues like emissions, energy and water consumption, waste generation and management, things like diversity, inclusion, employee health and safety for the social pillar, and various things for governance like board composition and independence, business ethics, transparency of reporting, that sort of thing. Again, it's just food for thought. The concept of core metrics was prevalent years ago. In fact, early versions of GRI really embraced the idea. And then it seemed like the idea of sector-specific materiality, which again is really important, it seems like that took over for a while and the notion of core metrics became taboo, if you will. But recently, with the less is more mentality making a comeback, this idea of core metrics is kind of making a comeback. So I wanted to bring it up. Don't be afraid to embrace it. It's really helpful, especially for exploratory ESG analysis. Again, not in lieu of sector-specific research and materiality considerations. Just some data sources in terms of company reported data. Seems obvious, but I want to point out a couple things, particularly they'll call one-stop shopping resources for company ESG reports, sustainability reports, ESG reports. Particularly useful when you're doing research on a large number of companies. It's kind of a pain to go to, if you're looking at a peer group of 50 or 100, you go to 50 or 100 websites. There are places where reports are aggregated. GRI's database, or whatever it's called, used to be a great source, but it's been discontinued, and I think it still exists, but it's not being updated. But there are some other sources. Corporate Register is one of them. It's a central repository of issuer sustainability and ESG reports, global. I mean, it's a huge number in there, like 152,000 some odd reports by 22,000 some odd organizations as of a day or so ago. It's all available free registration, for basic searches and links. There are more advanced features available with subscriptions, particularly if you're into natural language processing, et cetera, and so forth. But to do research and get links, it's free. An emerging one is Report Advisor. It's generally a really valuable research for a lot of things related to ESG reporting, but it's developing a sustainability ESG report database. It's currently online. It's available. It's pretty substantive already, but it's growing. They say it's in beta stage and that it's free in beta. I don't know what their plans are in terms of charging in the future, but it's definitely something to watch for. And then there are sort of other ones that aren't necessarily about sustainability reports, but are worth noting, like CDP's the Carbon Disclosure Project's open data portal. Again, that's CDP only, so it's water and emissions data, but you can again get lots of reports in one place. And then, as I mentioned earlier, stock exchanges, ESG data portals, and also just website document searches, if you will. If you go to the Singapore Exchange document search and set the type of report filter to sustainability report, you get sustainability reports. The one thing I'd point out, though, is a lot of companies do submit integrated annual reports, and those may not show up in that list. Hong Kong Exchange, predefined documents, there's an option that's something like financial statement / ESG information. So there are other ways to get a large number of ESG reports in one place without having to go to lots of different websites. And then just on the right, tip that I use that usually gets me what I want on the first or second try is just getting proficient with advanced Google searches if you aren't already. The example there in highlighted yellow is just a string, DBS Sustainability ESG report, file type PDF, right? That eliminates all website results that tend to clutter search results, shows you only PDFs, and in this case, I got the most recent sustainability report in the first two links. The first one being via Singapore Exchange, and the second one being on DBS's website. Some ideas for third-party related data sources. A lot of the third-party products are, well, they're all proprietary, but a lot of them are highly commercial and have been very expensive. That's changing. Many of the providers now provide high-level scores and in some cases detailed scores to the public on their websites free of charge. Some of it is voluntary. Sometimes it's in anticipation of regulation. I've written reports recently on IOSCO's framework for regulating ESG ratings and data, and subsequently like SEBI's interpretation of that. And common theme is making some information available to the general public. So here are just a few examples. MSCI corporate ESG scores on some, I think it's over 2,900 at this point, scores ratings of climate data for corporates, and then there's some other ratings categories for funds, mutual funds and ETFs, as well as ESG indices. Those are just high-level ESG pillar scores. Refinitiv offers a little bit more detail on their scores, both top-level ESG scores as well as detailed scores for what I'll call dimension, pillar dimension. So for example, environmental, they'll give you not just the high-level environmental score, but scores for emissions and other things. Social, they'll give you scores for human rights, employee, whatever they label them, like employees, et cetera, and so forth. S&P also goes into another level of detail. And by the way, I said it before, but anything underlined is a hyperlink. And for some reason, when you download the presentation, they don't work. I can certainly send them to you, but I tested them before, so they should. S&P provides detail as well. It's the only one that provides sort of a time series, a history of scores. The other ones are really static current scores and ratings, but S&P provides, I think it's a 5-year history. And like Refinitiv, it goes into some additional levels of detail for each of the 3 ESG pillars. And then lastly, Sustainalytics. And by the way, the first 3 are kind of broad providers. Sustainalytics is ESG only. And with a slightly different focus, its core family of ratings are ESG risk ratings, as opposed to some assessment of ESG performance. Just keep that in mind. But they do provide fairly limited data on a per company basis, free of charge. But again, ESG risk ratings, which the others aren't, so it's a good supplement. And the thing on the right is just an example of the S&P. And that's really just a small section of the S&P site. There's a ton more information on there. Stock exchanges. I mentioned before that these are becoming an increasingly important source of ESG data. Now, often it is a convenient one-stop portal for issuer-reported data, right? So nothing necessarily new, but a very convenient place to get a lot of data without having to go to different websites. But there are some that are providing value-added ESG data and information. A few representative examples: Singapore Exchange, and by the way, all of this stuff is changing, and exchanges are providing more and more information every time you go back to the website. There's something new. But Singapore Exchange offers ESG ratings from a number of different providers on listed companies. They tried to capture some of that on the right, but FTSE, MSCI, Sustainalytics, S&P, and then VE, which used to be called Video Aris. I can't even pronounce that. Hong Kong Exchanges and Clearing got their Stage ESG investing portal. It's kind of a similar situation. Offers a number of scores, a more limited set of ESG scores and ratings than Singapore Exchange, but something very similar. The examples are listed there, and then a few others. I mean, this is not an exhaustive list. I put NASDAQ and Intercontinental Exchange are doing similar things. I put Deutsche Börse in there just because they made a recent announcement within the last week or so. about expanding their ESG visibility hub for the Frankfurt exchange to include not just basic company data, but allowing for issuers to upload supplementary stuff, ESG ratings, various data, spreadsheets and charts and figures and reports and that kind of thing. The point being here, again, just 3 examples. The point being here that stock exchange are becoming a very important category of ESG data sources. One that people don't talk about all that much, but I think is really important, are cooperative initiatives. I'm talking about things like science-based targets, transition pathways, climate action 100. Those are just a few examples, but they often provide unique sustainability and ESG related data on their signatory companies that is truly unavailable elsewhere. I think that's the key point on this slide. There are quite a few of them. These are just some prominent examples. Science-based targets initiative is really about establishing science-based emissions reduction targets and audited kind of net zero targets, audited by client scientists, et cetera, so forth. It's kind of like the gold standard of emissions reductions. They have about 2,500 company signatories and really detailed information on them. And I should point out that underneath the italicized bullet underneath each of these 3 is a link to detailed data. In the first and third case, so for science-based targets and for climate action 100, they're Excel workbooks. The middle one is far more in-depth. It's a zip file with a number of different scenarios and models, et cetera, and so forth. Ultimately, when you unzip it, they're all CSVs and Excel files, but it is an archive. And I just want to point out that if you copy, I didn't hyperlink those bullet points because they are automatic downloads, and I didn't want to do that to you. So if you're interested in that data, you have to copy and paste the link. And just be aware that as soon as you copy and paste the link into a browser, you can have a data download from your downloads box. But they're really, really, really useful. And the other 2, so I mentioned science-based initiatives, transition pathways initiative. It's really, again, climate scientist-backed assessments of companies' preparedness to transition to a low-carbon economy. It's a smaller group of signatories and coverage companies, about 500 globally, but just amazing data and really effectively modeled and something you'll never find anywhere else. And then Climate Action 100, it's a pretty common one. You've probably heard of it. It's just an investor-led initiative. It's all about engaging corporate issuers on decarbonization. And that's a pretty substantive sheet of data as well. I should point out here, I just realized as I'm looking at it, that links to the most recent version as several hours ago. So that link is current, but if you were to come back to this in a month, I would go directly to their website because they're going to have an updated version. And this is obviously linked to 2021-12 version 1.9, et cetera, and so forth. And on the right is just an example of the breadth and depth of coverage and data that Climate Action 100 provides in the spreadsheet. And there's a lot more to it. This is just a small example. And then lastly, kind of dorking for data. I don't know if you've heard of Google dorking, sometimes called Google hacking. It's really just using Google advanced search services to find the really good and hard to find stuff. There's an amazing amount of ESG data out there. You just need to know how to find it. There's a ton of data in the deep web, right? The unindexed part of the web. And deep web searching is an entirely different conversation. These are just a few like representative, not even close to exhaustive tips for service web searching. And the point here, rather than the specifics, is just if you're really into doing ESG research, hands-on, and you aren't yet kind of comfortable with Google dorking, so to speak, I get familiar with it. There's a link at the very bottom of the blue box that says for a list of search queries, see the Google hacking database. But there are a lot of things you can do with various operators. The first 2 I put in there, the examples, file type. That's one I use a lot. Generally speaking, you put a search term in, you're going to get websites. With the file type operator, you can limit search results to files only and files of a certain kind, basically avoid websites. So I use file type XLSX a lot to find ESG related data. I use file type PDF a lot to find sustainability ESG reports, just like I sort of showed before with DBS being in the first two search results. And occasionally I'll put XLS and XLXX just to cover all versions of Excel. But that generates stuff that you would be amazed is out there. And I use that a lot. And then the site operator limits results to a certain site, which I also use pretty regularly, a little less so though. Just use DBS as an example again, putting site dbs.com limit search results to dbs.com and its subdomains. And you can also, it's occasionally useful to exclude site results just by putting a negative sign in the front of it. And then, it gets really fun when you start combining operators like carbon, file type XLS, and site cdp.net or something like that. There is a ton of ESG data out there. It doesn't necessarily get indexed or crawled by Googlebot or doesn't appear high up in the search results that you would normally get. But as soon as you start working with this, it's right up top, and it's stuff you'd be amazed exists. And on the right, I just threw in a few random examples. I often put in, some string like ISN or CEDOL or ticker or something like that, which leads to, Excel workbooks that's stock related data. So the example I threw in there, I just put in Singapore ISN emissions file type XLS and came up with a few interesting results. Again, you can copy and paste them. I did want to hyperlink on you. And similarly, adding one or more company names, and I put them in quotes just so it was literal, often gets you a focus list, like putting DBS and OCBC in their emissions file type XLS, gets you a pretty concentrated set of companies, rather than some global list, it gets you a more regional list. Just a few examples. Again, there's a great reference on the bottom left there in the blue box. If you're into this kind of thing, there are other operators. There's so much you can do with this, and I can't tell you how much data I have uncovered, ESG related data I've uncovered that you wouldn't find elsewhere. And it's all up to date and essentially public domain. That's the gist of it. I know there's a lot to cover, a lot to digest. I tended to kind of forget before getting into this. I forgot how big of an issue this is. So as I said in the beginning, we'll call this a Q&A session, but feel free, even if you don't have a specific question, if you want me to get into more detail or explain something more in depth that I breezed over or that I wasn't clear about, that can be included as well. So I'll open it up. Michael.
Thank you very much, Kyle. That was a great presentation. Not only did I learn a lot about ESG data, but I also learned new iceberg terminology. So yeah, thank you for that. And I'll be doing a lot of Googling after this. There's a few questions that have already come in, so we'll get right to them. An attendee asks, and you actually kind of talked about this during the ESG data sources segment, Kyle, but perhaps you can see if you have anything to add here. Is the buy-side challenge more about getting access to the data and source it themselves, or is it to take data from third-party sources and analyze it?
I think it's both, and I think it's a third thing. One is, the third thing is assuring that the buy-side firm has the expertise to interpret and integrate ESG data appropriately. Not all do, and I think that's going to be an issue for a little while. That ESG data, ESG analysis, et cetera, and so forth is kind of a knowledge-intensive endeavor, and unless it's a well-heeled firm that's invested in in-house human resources that are knowledgeable and experts in the area, that's a big impediment. There are tons of surveys out there, and if you just Google like ESG data survey, blah blah blah, you'll see plenty of surveys of institutional investors that show that some high percent, 80, 90%, et cetera, and so forth, are considering ESG data, and they're increasingly integrating it in-house. But then if you get a little deeper in the analysis, there's always, or not always, but often, an indication that the in-house supplements or is supplemented by continued use of third-party ESG information. Something I said pretty quickly before, which is relevant to this, is that when I mentioned the two trends, one being increased regulation on disclosure, and the second one being increased investor kind of do-it-yourselfness. I said that there was a less and less reliance on third-party ESG data, at least the highly processed stuff, meaning like scores, ratings, et cetera, and so forth. But keep in mind that MSCI, Bloomberg, et cetera, and so forth are happy to provide raw underlying data, which is sometimes just repackaged raw data from the companies, but often calculated ESG metrics that looks like raw data. It's not highly processed like scores and ratings, and then the investors do with it what they want. So they're still using third-party data providers, just kind of different corners of their product repertoire, if you will, like a little bit more focused on what goes into their scores and ratings, and using it in their own ways, what goes into third-party scores and ratings, and institutional investors using that data and those metrics in their own ways, as opposed to relying on the scores and ratings to make decisions, if that makes any sense.
Got it. Thank you very much for that. Let's go to the next question. Is there any time frame for when this more regulated ESG reporting framework is expected, so that investors can roughly know when to begin taking these ESG metrics more seriously, or when markets actually begin to price for it?
There isn't necessarily a single framework out there or in the works, but there are organizations that are trying to push the world towards a common set of metrics. But I don't want to say the problem, but the issue there is that there are several, kind of consortia pushing the world to the same common set of metrics. So you're dealing with potentially 4 different sets of common ESG metrics. So we're still a long ways away, from any one common set. But there's a move towards greater international consistency and standardization, et cetera, and so forth. And I think you'll see reaching a critical point towards that end within the next couple of years. But it's hard to say. It's hard to say because it's ultimately the regulation and policy side of things, mandating disclosures at all, and then mandating what's to be disclosed by whom, whether you disclose this, that, or the other thing, whether it's everybody, whether it's the largest 1,000 companies by market cap, et cetera, and so forth, is up to so many different, governmental organizations around the world. It's hard to conceive of a truly unified set of metrics or even guidance in the near term, but I think we'll get significantly there, to the point of kind of alleviating much of this pain that I've been talking about within the next couple of years. It is a fire that's been lit under the industry. There's a real sense of urgency about it and real movement afoot. So, I've said things like that in the past with little confidence. I'm saying that now with a greater level of confidence, more so than I've ever had before, that we will get there fairly soon. But soon is still, a couple of years at most.
Got it. Thank you very much. Another question is, given the challenges associated with ESG data, how do you feel about the ESG ETFs that are becoming more popular?
Where do I start with that? There are a number of issues. To start with, the vast majority of ESG related ETFs are passive, indexed, and they're indexed to ESG indices that are, in one way or another, based upon this ESG data that I've been talking about, and they reflect a lot of the problems that I've been talking about. And there are a whole host of issues. I think it's great. The proliferation of sustainability and ESG related ETFs is a great thing, and it's not all ESG. I mean, they're thematic funds that kind of fall into the sustainability realm that aren't ESG specific, but that address climate change or social issues, et cetera, and so forth. It's all great. Investors just need to really understand what it is they're getting into if they're investing in them. They need to understand the index and the index methodology behind them, and that not every ESG fund is a quote unquote socially responsible fund, or not every ESG fund is going to, the constituents of every ESG fund aren't going to be obvious if someone is really environmentally minded. You always see these, articles, how can such and such ESG fund include ExxonMobil, et cetera, and so forth. You have to look into the methodology. It's a really confusing space. And there's another issue that it's worth noting is just that there is some greenwashing in the space, but I think the bigger issue, it may be called greenwashing, maybe a form of greenwashing, but there are a lot of funds that are kind of pivoting, if you will, tacking ESG or sustainability into the label, maybe changing their investment objective a little bit, but really aren't fundamentally different than they were before. They're basically ESG rebrandings. I've seen it in a few cases in ETFs. I've seen it more so in mutual funds, but that's another issue. A long-winded way of saying that I think the proliferation is great. It's net good, but there are nuances that investors really need to be aware of. That you're not always getting what you think you're getting, and not every sustainable / socially responsible / ESG focused fund is really that. That's another area that will see increased regulation oversight. It already is, particularly in Europe, and will elsewhere. So ESG ratings data providers are seeing greater regulatory oversight, and funds are, particularly with respect to greenwashing, and will see more so.
Great. We've got a couple more questions to go. From a listed company's perspective, given the different users of ESG data, from ratings providers to regulatory bodies, what are your thoughts on the best way for a listed company to communicate their sustainability activities? For example, integrated report or sustainability report. What are some websites to be registered on?
Yeah, I'm torn in terms of dedicated sustainability / ESG reports and integrated reports. I'm kind of torn on that issue. I think that in the long term, integrated reporting is going to be the better way to go, just because you have everything. As we think more and more about the financial materiality of sustainability, historically it was more about corporate social responsibility. Now we're talking about financial materiality of ESG performance. So it's the proper place to go, really, and will be more so. The SEC in the US is talking about requiring particularly climate-related disclosures actually in XBRL, in inline XBRL with SEC filings. It just long-term makes more logical sense to be integrated with the financial reports. But there's this window currently where I think it happens a lot to me. Is I still expect to see a separate sustainability report, and when I don't, I sometimes forget to look at the annual. In other words, I might in the back of my mind think a company isn't really reporting on sustainability or ESG when they are in an integrated report. So it's a tricky situation, but long-term integrated. Another tricky issue for issuers is resources. It's tough for smaller companies to do this sustainability ESG reporting thing, particularly since ESG information comes from so many different departments, right? Financial information, you just walk down the hallway, to the CFO wing and talk to the controller or whatever. All the financial data is in one place. You talk about ESG data, you might have to go to human resources for something. You might have to go to operations for something. It's all over. It's often in spreadsheets. It's really difficult. And getting the data consolidation, aggregation, consolidation, reporting process down right takes a lot of investment, and small companies can be challenged with that. Now there's this emerging ecosystem of ESG and sustainability reporting fintech that's absolutely fascinating. They're helping that process, but again, that's still a challenge. That was a multi-part question. Was there anything in that I missed?
I don't think so. I think that was actually pretty clear. But of course, if anyone wants to follow up, they can also email us, and we will share your questions. For the final question today, clearly we're in the early days. What would the ideal future look like to you?
The ideal future of, I'm assuming we're talking about ESG data and disclosure. I mean,
that is my understanding. Yes.
Yeah. I mean, assuming that's the case, I mean, the ideal panacea would be, my knee-jerk reaction there, and I paused, but would be one global set of standards that's agreed upon, it's consistent. That may not necessarily be ideal, but at least a much smaller number. We have 1 or 2, 3 sets of standards, or maybe one overarching set of standards for core metrics, and then a few regional standards. I mean, you have to bear in mind, I mentioned sector-specific materiality difference. There are also cultural differences, or regional differences, cultural differences, et cetera, and so forth. So I think one set of global standards probably isn't the answer, but the idea would be some much smaller set and fairly consistent set of standards. And the other thing that I feel strongly about is not just what's reported, but how it's reported and how it's delivered. I'm big into XBRL. If people aren't familiar with it, I'm sure everyone is, but if not, just Google it. I think that ESG data should be reported via XBRL, and I know that they're working on taxonomies for that, but just the availability of ESG data electronically, just as you would get financial data, because right now it's difficult. I mentioned before, a lot of it comes in sustainability reports. Those are PDF documents, and companies are getting better. And this goes back to one of the questions about what could a company do to convey the story. Companies are getting better, and as I mentioned before, they often provide like Excel supplements to ESG reports with the data, but still many of them kind of disclose ESG data in unstructured text format. So rather than have a table of ESG emissions over 5 years, they'll have a text block that says our GHG emissions were X in this year, Y in that year, Z in this year. And it's really difficult to, I mean, if you're good at it, you can extract it, but it's really difficult too. It takes time and resources, and there are many companies that still don't know how to string, format, put together a PDF. So, many times data isn't data in a PDF, it's an image, right? And then you need to get into OCR, et cetera, and so forth. So that last point, in addition to a smaller set of frameworks, much more efficient delivery of ESG data to the end user, to the investor, such as via XBRL and certainly electronically, because these sustainability report PDFs have got to go.
Amen to that. Thank you very much, Kyle.
Great, but they're difficult to work with.
Absolutely. I totally sympathize. Thank you very much for this, Kyle. Thank you for this extensive and really detailed presentation. Thank you to everyone for attending and for sharing all your questions. If you want to engage Kyle more for bespoke research requests or to follow up with anything that you've heard here today, you can contact your Smartkarma account manager. You can also email us at research@smartkarma.com, and we will do our best to get you in contact. You can also follow Kyle's profile on Smartkarma so that you don't miss any of his insights. And of course, we will have links to all the previous sessions on Kyle's ESG investing series. Stay tuned for our announcement of the 5th part in the series that will be coming soon. And for any other questions or comments, as I said, research@smartkarma.com is the email address. Thank you, Kyle, very much once again.
Thank you. Thank you, everybody, for participating. Feel free to follow up with any additional questions.